All right, there we go. My bad. I don't know what just happened. My computer just like froze up for a second there, but we're good. We're good. We still got all 16 of you guys in here. So let's run it. Okay, cool. So backstory, like I was saying, before I actually came across these smart money concepts, I was only trading using, trend line, support, resistance, and the fib. Now, back when I was only trading with those few things, I didn't really, understand to the extent that I do now the power of the Fibonacci retracement tool. Okay, and this is something that, again, you can trade this or trade using this without necessarily understanding smart money concepts. This tool is extremely powerful. When you learn to better understand these different inputs that we have on the right hand side of my fib. Okay, now I'm gonna go ahead and hopefully I got a screenshot of that. I can pull it up later on in the session as well for those of you guys that are coming in throughout the session. But I want to start off with without any sort of let me just see here, any sort of chart. I just want to kind of draw this out for you guys. So we were talking about market structure on Monday, and the recordings for these will be put out this weekend. That is my goal, is to have everything out. I know I said that last weekend too. I've been really slacking on these recordings. I do sessions almost every single day, so my time is mostly put into doing these types of sessions with you guys. And I need to prioritize putting out these recordings for those of you that aren't necessarily able to hop on all of the sessions. So that's going to be, my number one priority over the next couple of days, is to really be able to post those recordings for y'all. So I appreciate the patience, and that will be done by the end of this weekend. That is my promise to you guys as we move into next week. It is now November. That is crazy. But yeah, let's reflect back to what we got on screen here. So, talking about market structure, right? This is an upwards trending market. And what I like to do with the fib a lot of the times is, if we're in an upwards trending market, I'll take my fib and I'll draw it from where we started this move to the upside to where we finished. Okay, so you're going to draw it from the low to the high. And this is going to provide us with hold up. Got to make sure that I don't have this on. There we go. This is going to provide us with a good a good depiction of, where we are looking to see price retrace back to before that next move up. Okay, so if we were to kind of just forget about all of these other lines real quick, okay, and just focus on this first up move and then the retracement, a lot of the times what I would like to see happen is price come into this area right here for that retracement before that next move to the upside. Okay, so with the fib, this is what we call the kill zone. Okay, I'm gonna call this the kill zone. I'm gonna label this for you guys. Okay, and the kill zone is, typically where we will see price come to, whether it's on the line chart or whether it's on the candlestick chart. We will see this retracement into the kill zone before that next move to the upside. Or if we were to invert the chart, we have a downwards trending market, it'd be the same exact idea, right? We're trending to the downside, we have this kill zone retracement before that next move down. Okay, so the fib is really just a way that you can gauge, these moves, because when we're trending in a market, right, we have the expansion, which is that move up. Usually we'll have a little bit of, retracement into the kill zone before, sometimes a little bit of consolidation before that next expansion. And then eventually it'll come to the point where we see that reversal, right? Where we see that break of structure, where this low gets breached and now we've created this new lower low, right? So similar to what we were talking about on Monday, but now we're going to combine a little bit of market structure with the fib, and why this tool, in my opinion, is arguably one of the most powerful tools that TradingView allows us to be utilizing. Okay, so the kill zone retracement, we'll go to some real real examples with USD CAD in a second here. But again, we're looking for this kill zone retracement, and then these areas up here, right? Because this is where we're drawing our fib to, right? From the low to the high, that's where we're stopping it. And you guys will see that we have these values that are in the negatives above the zero here, right? So each of these levels is basically, it's measuring how much price is retracing from where it initially started. So this would be a 100% retracement down here at the number 1, right? This would retrace, 50% of the move if it came down to here, 61.8. If it came to here, 70.5, 786, so on and so forth. Okay, so we're looking for, again, we're looking for the retracement into this kill zone. And sometimes what will happen is we'll see a wick, right? Some sort of institutional candle wick to the 886. So that's the significance of the 886, right? A lot of the times if we're looking on the line chart where there's no wicks taken into consideration, we'll just be looking for that retracement into the kill zone. But the 886 is there to line, typically line up with these institutional candles that we like to play off of. Okay, if you guys have any questions about, anything that I'm talking about throughout today's session, please do feel free to drop it in the chat. Okay, and so the levels up here, right? If we're trading with the trend, okay, so we've seen this expansion, we've seen the retracement. This is where we are looking to enter our buy from. Okay, somewhere within the kill zone, that's where we're looking to enter our buy. Right, and whenever I enter my buy in the kill zone, this is usually where I'm targeting, is these levels right up here. Okay, and the real examples with the candlesticks that I'll show in a minute here, you guys will see that time and time again, we will see that retracement into the kill zone, and then we will see price expand going beyond that previous high and reacting somewhere within these areas right up here. Okay, so and again, it's basically just rinse and repeat. So once you've seen that next expansion, right? Once we've seen that next expansion, we are then going to essentially be deleting this fib and redrawing it from now the previous low to the most recent high. Okay, and once again, what are we looking for? That kill zone retracement, right? That kill zone retracement before that next expansion to the upside. And once again, we're looking for buys in this area, buys in the kill zone, and then our take profit would be somewhere within these negative numbers up here. Okay, and it's basically, again, it's just rinse and repeat. So you would do this you would do this basically until the trend breaks, until we see a break of structure, right? So you would continue to draw your fib like this as we are continuing to trend to the upside, right? So we've done that first move, we've done the second move. Now we're going to take our fib from the previous low to the most recent high here. Once again, looking for that kill zone retracement. Once again, looking to take profit up here. Now, this is where we see that break of structure, right? So, we would move our fib from this low to this high now. And ideally, we would be targeting, once again, that kill zone, right? So here, we would be stopped out of that trade. If we were buying in this zone, our stop loss could be one of a few places. But a lot of the times when I'm buying from the kill zone, right? When I'm buying from the kill zone like this, my stop loss, depending on if I'm playing off an institutional candle or not, because again, you can use the fib without necessarily understanding smart money concepts, okay? So let's say I didn't understand smart money concepts, we could look for a buy off that kill zone retracement, and your stop loss could just go below the previous low, right? And then you're just, again, you're targeting that area up here, and that's going to give you between a 1-to-3 and 1-to-4 risk reward ratio trade, right? It's with these institutional concepts and understanding how the institutions play that's going to give us those even, smaller risk trades for those even bigger reward trades. Okay? Oh, that's cool. 3, 3, 3, 3. Sync tuition, not sync tuition, synchronicities. Sync tuition's an app. But yeah, you're looking to enter in the kill zone, and again, you're targeting up, ideally in this area for that next expansion, because a lot of the times we'll see the price come up and give us a bounce within this area, right? So if you really want to maximize your profits, right, you're looking to get out of your trade somewhere within these kind of 3 negative numbers up here. That's where you're looking to take profit. 3 is your favorite number. I respect that. The number 3 is a very special number, and it just Wow, okay. Come on, guys. Do you guys know what synchronicities are? Let me know in the chat if you guys know what synchronicities are. Synchronicities, I'm going to pull this up. I'm going to go on a tangent real quick about these. And then we'll go back to what we were talking about. Let me know in the chat if y'all have ever seen repeated numbers like this before. Right? This is some important stuff. All right? The reason I'm saying this is because we literally just saw, you know, with my position here. Whoops. With my position here, we just saw take profit of 333.3. The time just turned to 12:22, right? That's 3 2s repeated. Even some random number combinations tells me something exactly. Yep. These are so powerful, you guys. If y'all, this is what I encourage you to do. If you're like, okay, this Don guy's, you know, talking some cool stuff about the fib, now he's just going crazy, right? I challenge you guys to start paying attention to these repeated numbers. Okay? These repeated numbers have a deeper meaning, and it's not just, you know, oh, it's 1111, make a wish. There's a deeper meaning behind these numbers. Start paying attention to repeated numbers like this. Look for certain screenshots that'll give you a breakdown of what each of these, you know, is meaning, right? This is one that I have, it's a different color, but it's the same stuff's written in here. Yeah, trading is super spiritual. That is facts. That is super facts. Let me just read the chat here. Yeah, we got a lot of people that resonate with this stuff. That's amazing. Even some random number combinations. Exactly. Synchronicity is my signs. Yep. Nice. Out there in Aussie. Sheesh. That's crazy. We got people all around the world who hopping on these calls now. That's super cool. If you see, for example, 777, then try to remember what thoughts did you have before you saw it. Then bang, you get it. Yeah, no, it's true. It's all connected, you guys. These are like very significant numbers. Life is just one great big game of math. And, you know, nothing's a coincidence. It gets to a point where you'll start to realize that you're seeing these way more often than you were before. And it's not because you're going out of your way to look for them. It's because now you see and understand that there's a deeper meaning behind this. And it's not just that you're seeing these numbers repeatedly, right? There's a deeper meaning. What did you look up for that pick? I looked up synchronicity's meaning and went to images, and there's a bunch of different ones. This is like the one that's right here. We got some other ones here. 000 has a meaning as well. Preparing for the new, it's like starting over, if you will, or like a new journey. But anyways, that's enough about synchronicities. Back to the fib training. I just thought that was cool how we saw 333 with the position size, and then it just turned to 1222. So I figured I would pop off about that for a second. Yo, since I've been trading with TradeHouse, they've intensified. Yeah, no, it's literally, if you're on the right path, you will see these numbers so often it's not even funny. Right? If you're on the right path, you will know that you're on the right path because you will see these synchronicities so frequently and repeatedly. It's just insane. It's insane. Right? But anyways, back to the fib training. Hopefully y'all start to pay attention to those synchronicities, though. That is super important. Repeated numbers have a deeper meaning. Call me crazy, but y'all are gonna start to see them more if you do actually, you know, start to pay attention to the numbers a little bit more. Again, not going out of your way to look for them, but just recognizing that there's a deeper meaning behind them when you see them. It's all connected. It's all connected. But yeah, anyways, back to here what we were talking about before, right? So we're measuring our fib from the low to the high. We're looking for that kill zone retracement. In this case, right, price comes down, and this would stop us out of that trade. Okay, we would get stopped out of this trade, and immediately once we see this break of structure take place, where the market comes down and breaches that lower low that we had previously, or sorry, not lower low, but breaches the low that we had previously, creating a lower low. This is when we're looking to then flip bearish, and we are now looking for sells. Okay, so let's say we saw a reaction down here. You know, now you would be drawing your fib from the high to the low and looking for the kill zone retracement up into here. Okay, and then, you know, again, you'd be targeting, you would look for a sell within that kill zone area, look to ride it down into, you know, your take profit down here. And then it's, again, just rinse and repeat, but in the opposite direction. Okay, So hopefully that's making sense. This is kind of the basic breakdown of how I use the fib. Again, the fib is something that is extremely powerful. You can see, I challenge you guys to go ahead and backtest using the Fibonacci retracement tool. This thing is extremely, extremely powerful. We'll see it in every single currency pair. We'll see it in Bitcoin. We'll see it in, different stocks. It's not just the foreign exchange market that we will see beautiful lineups and examples of the Fibonacci retracement tool, right? But today I want to focus on USD CAD. For those of you guys that know me well, USD CAD is like one of my favorite currency pairs to break down basically anything, right? Literally anything. It could be market structure. It could be, just the fib. It could be smart money concepts, all of it, right? USD CAD is my favorite currency pair to break everything down on. But we can look at different currency pairs as well to, see what kinds of examples we have. I just know for a fact USD CAD has some really good examples here. So we'll start off with this one, and then if you guys want to toss some currency pairs in the chat, we can go ahead and look at those as well and kind of backtest with the fib here too. What's my favorite time frame to use the fib on? I use it on every single time frame. So right now we're on the daily, right? Whenever we're talking market structure, I always like to focus on these bigger time frames, right? So that we can get a better depiction and kind of idea of where the market is going longer term. And then what I'll also do, right? Because we have basically everything is what we call fractal. Everything's fractal. And fractal basically just means that it's waves within waves, market structures within market structures, candlesticks within candlesticks, right? It's essentially like the never-ending spiral, right? That's another thing. So the Fibonacci is, I actually have this tattooed on my wrist, by the way, you guys. I have the Greek symbol phi. I'll show you what this looks like. So the Greek symbol phi, this is where Fibonacci basically derives, right? Phi is essentially representing the golden ratio, which is seen in a variety of different things, including the financial markets with Fibonacci, right? The Fibonacci retracement tool. But the golden ratio is something that I was really, really fascinated by for quite some time. And I actually have the word focus tattooed on my right wrist, and the O is the Greek symbol phi. And it's very, very interesting. I came across the golden ratio from trading, but it's found in literally every single aspect of life, right? It's found in the human face, it's found in the human ear, it's found in all kinds, like literally every single animal, the golden ratio is present. Let me see if I can find like a good website that'll kind of just real quick. This is the never-ending spiral that I was talking about. So it's like everything's fractal. It's like waves. So maybe we're on like the 1 minute time frame down here, and then it just keeps growing and growing and growing and going on forever. Oh, sweet. Thanks, bro. Appreciate that. My boy just brought me some food. But yeah, the golden ratio phi is very, very powerful, right? And it's something that we can see and utilize in the markets using this Fibonacci retracement tool, right? Leaves, bugs, rocks, literally your hand, your feet, exactly. Colin's got it. It's literally in everything. Space with the galaxy, right? You ever seen those galaxy spirals? I guess it would be like a black hole. Yeah, these, it's found in these. It's crazy. It's literally everywhere, right? And it's just math.
Yeah, you show them the spirit science video?
The spirit science video. Nah, I'll pull it up real quick. That's a good idea. We'll watch this clip real quick, and then we'll continue with USD CAD just to break it down. But it's really interesting to see spirit science weed is the first one that comes up. Fibonacci. I think I spelled that wrong. Yeah, I did. Is it this one right here? 6. Cool. Here, let me see if I can get this playing for you guys. Alright. Alright, peace out, bro.
We're stirring the pot now.
We're going down the rabbit hole.
You have your own experience. In lesson 6, I showed you an intro to sacred geometry, the flower of life. We looked at the Genesis pattern and how it forms the fruit of life.
Can y'all hear this? Can y'all hear this okay? The quality of the video is not that great. Let me see if I can pull this up. Okay, 360 max. Oof. Alright. Cool. I'm only going to play a part of this. Let me see if I can skip to here.
Comments. Phi, also known as the golden ratio or golden mean, is a very simple relationship. If you had a rod and were going to put a mark on it, only two places would mark the phi ratio, which is here or here. The length of A plus B is equal to the length of C. This ratio is 1.6180339 and continues on forever. If you multiply the length of C with phi, it will create the exact same image, only bigger. C and D is equal to E. This ratio could then span on forever, going smaller and smaller or bigger and bigger forever. This ratio is infinite. It has no beginning and no end. It is also believed that phi is the mathematical root of all other sequences. See, every mathematical sequence in existence needs a minimum of 3 numbers to figure out the sequence. Phi only needs 2. It is the only one. Similar to how the circle and square are the source of all shape, but we'll get to that later on. The next thing that you need to know is that this ratio is found in all life everywhere, sort of. By sort of, I mean it's really Fibonacci, but we'll look at that in a moment. Look at your hand. Not only does each finger have its own ratio moving up each finger, which is phi to the next bone, but it oscillates back and forth from the tallest finger to the thumb. You wonder why the human hand is like that? It's based on phi. This relationship is found throughout the body in various ways, moving up the arms and legs, in your face, throughout the entire body. This is a Greek statue that accurately represents this. The Greeks were very precise when they made their art, because they understood phi, Fibonacci, and the importance of these sequences. When the Romans took over Greece, you could see the perfection in statues just completely disappear. I'm not saying the Romans were bad artists. They just didn't measure everything to the same caliber that the Greeks did. Here is the phi ratio in butterflies. You can see this ratio everywhere, from the wing size to the body to the antennas. They're all phi ratios. Here's dragonflies. It's the same story. And closer every time, until eventually you can't even tell the difference. Because phi is an infinite number, this sequence will go on forever. Let's look at some spirals in nature, another way that phi and Fibonacci can manifest. This is a nautilus shell. Many people will say it's phi, but it's really Fibonacci. See how when it's in its earliest form, it's crude, not smooth or anything? One look and you can tell that's not phi. But as it goes out farther and farther, it gets closer and closer to phi. It becomes a nearly perfect phi spiral by the time it's all the way out here. This also happens with sunflowers, pine cones, and many plants in nature. In many cases, such as the pine cones and sunflowers, it flows in a double spiral or more, much like the spiraling arms of a galaxy. From the microcosm to the macrocosm, spirals are always present.
So cool.
Phi is basically source, or spirits.
You guys pretty well get the gist, though. This is,
the math of God.
you know, again, it's just like everything's connected. You know what I mean? It's all connected. It's all, right now it's 1, 2, 3, 4, 1234. That's another number that I see a lot. I'm just realizing that as well. It's crazy. We're all synced up. That's how I know that what we're doing right now with you guys in this call is like it's meant to be happening. You know what I mean? But yeah, the 5, you know, Fibonacci, it's all something you guys can look into some more on your own time. But it's very, very, very interesting. You know, it's something that, like, think about it like this. So, you know, if you were a spider, or not necessarily if you were a spider, but if we were to look at a spider that was creating a web, right? To us, if you really like look at the web and how perfect it is, dimension wise, and just, you know, the ability to create a spider web is very, very cool, especially considering we can't make webs, right? But nonetheless, we look at it as like a piece of art, like it's beautiful, right? But the spider doesn't necessarily realize how beautiful it actually is, right? A spider might just be like, oh, you know, this is something I make, you know, every single day or every single night, like whatever, it's no big deal. And these markets are the exact same thing with all of us, right? These markets are so beautifully aligned mathematically. It's literally like we are all collectively working to create this beautiful spider web, but we do not understand how perfect this really is, right? These markets are so beautiful and so beautifully, like, mathematically, it's ridiculous how insanely precise and beautiful all of this is in these financial markets. And this was like the entrance for me into a lot of different things, but phi was like one of the first ones. And phi was something that I was really, really drawn to, and it's one of the reasons that I got, you know, focus is a whole nother thing, but the O, I wanted it to be the Greek symbol phi because it has so much of this deeper meaning. It's literally everything is connected, right? But anyways, we'll go back to the fib training here. We've gone down a couple rabbit holes, but I honestly love doing that. I love being able to, you know, interact with you guys and show you guys different types of cool things that have had you know, an impact on my life. And from the looks of it, it's also something that has, you know, had an impact on your guys' lives as well. And it's something you guys can resonate with. But we'll go back to the line chart here. And I kind of just want to break down the fib, show you guys some cool things with the fib here on the daily time frame with USD CAD. So here, if we zoom out, you know, this was an uptrend, you know, from basically back in 2011. We broke above this high here, and we can see that, you know, we were making these higher highs and higher lows, and then we finally broke structure right here. So initially, we would have been drawing our fib from basically the, you know, the low to the high when we were in this upwards trending market. But immediately when we break structure here, that's when we flip and we want to be drawing our fib from the high to the low. Okay, and we'll see that price, you know, comes down to that low point where we've finished drawing the fib, right? And we'll see that we retrace basically up to that 618 area, right? Pretty well up to that 61.8, that kill zone, the start of the kill zone up here, before then continuing to the downside and giving us a reaction within this area right here. Okay, now if we zoom in a little bit, we can see that here, you know, we were in this downwards trending market a little bit, right? Creating these lower lows and lower highs. This was the previous high, and it was breached. Okay, so we can be looking at this on a bigger, you know, from a bigger kind of longer time frame standpoint. But we can also look at this on a smaller term basis as well. So this high was breached right here, right? And we can see that this continues trending pretty beautifully to the upside, okay? It never ends up breaching this high right here, right? So we might have seen a break of structure on the daily, but not the weekly, right? Because this is like a move down, retracement, move down, retracement, move down is what we're anticipating here. So a break of structure on the daily doesn't mean that it's a break of structure on the bigger time frame, right, on the weekly. But if we take our fib from the low to the high when we broke structure right here, whoops, right, when we broke structure right here, we can see that, you know, from the low point to the high point, we get that kill zone retracement before that next expansion to the upside. And where do we bounce? Right here, right? So with the fib, you know, we're looking for that retracement into the kill zone. That's where we can be buying from to then ride this position to the upside and take profit somewhere within these three negative levels up here. Okay, so the expansion is when basically we breach and go above the previous high. The retracement is when we retrace but don't come lower than the previous low. Okay, so we've measured this move. Now we're going to take our fib from here to here, and we're going to see pretty much the exact same thing. So once again, price comes into that kill zone area. That's where we look to enter our buys from, okay, for that next expansion, that next move to the upside. And once again, we see that reaction from here, right? So we buy in here, we look to take profit and close our position up there, right? And it's literally, again, it's just rinse and repeat, same thing, pretty well over and over again, right? Now this is our new low to our previous high. We're looking for that retracement into the kill zone, like once again we got, and this time price rides up into these numbers up here before then giving us that bounce, that reaction to the other side. And here, this is where we actually see a break of structure. So here we created this higher high, this higher low, but here we created this lower high, and then we came down and created that lower low. So that's a break of structure, and immediately once we've created that lower low here, that's our break of structure. So even though we created a lower high here, that doesn't necessarily mean that that is a break of structure.
Sorry?
What's good? Can you hear me?
Oh, okay.
So yeah, this would be our break of structure right here. So we were looking to buy, right? This would have been in our kill zone, but this went up and didn't breach above that previous high. This could be a good indication that we're ready to fall over, but it's not officially a break of structure until we come below this lower low. Or sorry, this higher low over here and create a lower low. And immediately when that happens, right, when we breach and kind of break the structure here, that's when we flip bearish We draw our fib from the high to the low. Now we can see that we've come up to, you know, that 61.8 area. And over the next little while with USD CAD and a lot of the USD pairs, I want to see this break below this low to create a new lower low somewhere within here. So I think someone was mentioning gold. We can go ahead and take a look at gold using the fib. You can literally trade with just the fib, exactly. Like, you don't even need to understand, you know, these smart money concepts. If you were to trade with the fib, right, just understanding market structure in the fib, you can literally just draw it out like this, right? Look for buys at the 61.8, 70.5, and 78.6, right? Maybe you do like a 1% position here, 1% position here, 1% position here, right? Because there's no telling which area we're actually going to see that reaction off of. But literally your stop loss is just going to go below that previous low. And then you literally just ride it up to here, right? A lot of the times we're going to see, you know, these decent risk to reward ratios. This one would obviously just be a 1 to 2, so I wouldn't take that trade personally. But from here, that 70.5 area, that then becomes a 1 to 3 risk reward, right? Studied so hard, I honestly feel like something was missing. Yeah, the fib is literally, like, this is a game changer. When you guys combine the market structure with the Fibonacci retracement tool, that's where breakthroughs really come from. Like, the fibs are so freaking accurate. It's insane. Just like Colin said, it's more accurate than the actual patterns that a lot of retail traders are trading. It's literally just rinse and repeat. We look for that retracement. This is where we enter our buy from. This is where we look to take profit. Right? A lot of people, and this is a problem that even I have sometimes still. Like I used to have this problem all the time when I was initially starting to trade, was like I would overcomplicate everything. We have everything comes together, literally, right? It's crazy. These are the types of breakthroughs that I remember having myself, and being able to provide these breakthroughs for you guys, it makes me feel all warm inside, man. I love being able to do these calls with y'all. But we have this saying where it's or not saying, what is this called? An abbreviation? No, I can't remember what it's called, but we have K, so this is keep, and then we have I, which is it, S, which is stupid, and then another S, which is simple, right? KISS, keep it super simple, keep it stupid simple, right? This is something that
keep it simple, stupid.
Keep it simple, stupid, or keep it stupid, simple. Either way. Either way, it works, right? Keep it stupid, simple.
You're talking about KISS, right?
Yeah, KISS. There's like, I've seen a few people do it this way as well. I like it this way. It's like stupid, simple. It's like, that's your, oh man, we're going back to English class here. That's a verb, right? No, it's not like, okay, that wouldn't be a verb. Oh no, here we go. I'm exposing myself. You ain't gotta be smart to be a trader. Structure is super key, I agree. But keep it simple, basically, is the moral of the story here. And the fib is something that is so, you know, simple once you really get that breakthrough. And it's like, okay, now I know how to draw the fib. You can do this on any time frame. It could be the 4 hour, the daily, the weekly. I like to use these bigger time frames, again, when it comes to market structure, right? These bigger time frames have more, I guess, power, if you will, over the smaller time frames, right? Always keep in mind that longer time frame and longer term bias. But, you know, again, this is something that is relatively simple. I mean, when you understand market structure and how we had a break of structure right here, you literally just draw, use the fib, you draw it from the low to the high. There's that retracement. That's where you're looking for buys. This is where you're looking to take profit. And then it's rinse and repeat, right? You then redraw it from the previous low to the most recent high, goes on retracement, take profit up there, right? Previous low, most recent high, rinse, repeat over and over again until you get stopped out and the market flips and goes the other way. And then you literally just flip with the market, and now you're looking for sells as the market trends to the downside. Stick to your confirmations, pull the trigger, literally. Even got kicked with smart money because forgot all about higher highs and higher lows. Exactly. This is like the key to success. Like, when you combine these concepts with smart money, that's when like you become a ridiculously good trader. But market structure, I would say, is probably the most important thing to keep in mind when it comes to trading, period. Understanding the trend and how the market moves is really the key to success trading. And then when you combine it with these concepts that we like to, you know, trade, right? These smart money concepts, that's when things really get crazy, right? Let's go to the 4-hour time frame with gold. I know we have a few examples in here. From back over here, we have this kind of longer term. This is like a daily time frame expansion, if you will, I believe. All right, this is our daily time frame expansion. This only came down. And again, it's not going to be picture perfect every time, but if we were to take off the, let's see here. Yeah, so this doesn't quite come to the 50% point, but a lot of the times when I'm looking for, and keep in mind, this entire area was accumulation. We were talking about Wyckoff on Wednesday. Another concept to really nail down. I'm going to go ahead and drop this link in the chat again. The Wyckoff method. This is a really key website when it comes to furthering your understanding of the Wyckoff schematic, the Wyckoff method. Which side starts with 0 for an uptrend and downtrend? Good question. So if we were to be in a market that is going to the, you know, to the upside, right, upwards trending market, is there a way that I can, like, without clicking this thing on, make it stay in drawing mode? I wonder. But if we're in an upwards trending market, you're going to be drawing it from the low to the high, like so. Low to the high, low to the high, low to the high, until we get that break of structure. So the 0 is going to be at the top, the 1 is going to be at the bottom. Because think of it this way, right? You have that move up, the retracement, this is measuring how deep percentage-wise the retracement is in comparison to where you started. So if you were to come all the way back down to the number 1, that's a 100% retracement. Right? If it comes down to the 50, that's a 50% retracement, 61.8, so on and so forth. And then again, if you get that break of structure where price comes down and breaks below that previous low, you would then be looking to do the same thing, but in the opposite direction, right? So if we were to delete this fib right here, you're going to draw it from the previous high to the most recent low, kill zone retracement, and then it's just rinse and repeat. All right? Until once again you get that break of structure, right? And then you essentially you're adapting to how the market cycles and structures are going, right? So hopefully that makes sense. Okay, cool, Kyle, you got it, beautiful, right? But if we go to gold on the 4-hour time frame, we can see that on the daily, first of all, we saw this great big move, you know, break to the upside. Now, with this being said, especially considering we just broke out of our accumulation, which took like a few years, what we're waiting for now is this retracement to the top of the area that we just broke from, right? That break and retest, for those of you guys that know what the break and retest is, this is like the same kind of idea, but with Wyckoff combined. We're looking for that, you know, we've just seen that accumulation, we've now marked up, right? We're distributing right now. This is distribution for that markdown, but that markdown is going to be a higher low from that previous low, right? So we will mark up, consolidate for a little bit, mark down. We will then, that's a small markdown. This time I would be expecting a bigger one. And then you would be, you know, again, there's that next expansion, a little bit of consolidation before that mark down, before a little bit of consolidation before that next mark up. So when I know break and retest is working, but not smart money running through, sorry, I'm not too sure. Here, let me just reread that. So I'm not too sure what you mean, bro. You're gonna have to, if you're able to reword that question, like break and retest is something that does work. Break and retest is something that does work. Smart money concepts also work. It's like, it kind of like, you can look for combinations of the two. When we're talking about these, you know, this area of accumulation being broken through, a lot of the times we see that test where it comes back down, tests the top of the accumulation before flying. That's awesome, Deb. I'm glad that you're having these breakthroughs. This is awesome. This is awesome. But yeah, again, you know, we can see that this was our previous low before that next expansion. So if we measure our fib here, we can be anticipating this retracement into the kill zone, which also just so happens to be in line with this area where we just broke through. Right, this little area right here, this is in line with the kill zone. This is where we can be looking for buys on gold to then where? Ride it up to here. Right? And then it's just rinse and repeat. When we get up to here, we'd be expecting another retracement, making a new higher low, and going forward from there. So the daily, we're expecting a retracement here. Therefore, we should be looking for a break of structure on the 4-hour time frame so that we can be selling on the way down to where we're looking to buy from on the bigger time frame. And this is why sometimes we'll be in positions to, you know, sell to buy. If we're looking on the bigger time frame and seeing that we have quite a bit of room to go to the downside, in my opinion, yes, we might be trading against the bigger picture trend, but this is like you're maximizing profit by being able to trade in both directions with this retracement, because, you know, this has a ways to go to the downside still. So 4-hour, we can see that we came up. This was a low created, higher high, higher low, higher high, break of structure. We breached this, we breached this, right? This is when we want to flip to sells. And we measure it from the high to the low here. We'll see that we came up into that kill zone once again, getting that reaction right in there. And now it's a matter of, you know, looking to see whether or not we're going to come higher than this, because these equal highs, to me, like, I want to see these equal highs smashed. This is where we have imbalance right here. If we're looking just on the line chart, we have an institutional candle right here. This is what we were talking about yesterday. I'm still looking for this moving into next week. I want to see this spike up, take out all these equal highs, give us a reaction from this institutional candle and the imbalance fill before continuing to the downside. And I would look for here as like a take profit area. Right? So that's my bias on gold right now, but this is another good example of the fib. Just putting it to work. So how would you measure big smart money moves? Would you do it in one measurement or included the breaks? So we're talking about bigger moves. We would be looking on a bigger time frame most likely. So if we were to like zoom out here, we can see that there's a lot of noise. There's a lot of bumps in the price action. But if we go to the daily time frame, it doesn't look like that. It's a little bit cleaner. If we go to the weekly, right, we can see it even better. Where we had this, you know, this was a pretty fluent move to the upside. So this whole entire move to the upside, right, we can, you know, this is our previous low on the weekly. That's our most recent high. We can see that we're starting to slow down. We're starting to distribute up here, right, before then marking down, giving us that retracement to then buy it back up. So if you're looking on like, if you're talking about like big moves where we see like huge candles like we did with AUD CAD this week, right, where we see these massive candles, you know, I would measure this the exact same way that I would pretty well anything, right? You know, these bigger candles don't really mean much if we look on the daily, right? Yeah, we can see that they're a little bit big, but this is actually something that I was looking at too on AUD CAD, was a retracement up to here before I can, you know, potentially come into the downside. But I was also considering the fact that this whole area could be accumulation. How do you measure? Okay, yeah. Cool. I already read that. Beautiful. If y'all have any more questions or any other currency pairs you want me to take a peek at with, you know, with the fib and combining it with, you know, these different retracement kind of ideas, right? Go ahead and drop. Yeah, exactly. Wyckoff. That's another topic. Exactly. That's why I'm trying to get that recording out that we did on Wednesday. Did a good recording on Wyckoff on Wednesday.
That was dope. That was a dope recording.
Thank you.
A dope session, I should say.
This is like, it's really like, man, I remember when I was first learning all of this, the breakthroughs, it's like I went from being,
here too.
What's good?
There's also imbalance there.
Oh, exactly. Yep.
On the,
Are you looking on AD CAD or are you looking at
whatever's on your screen.
Yeah, AD CAD, this like whole like area of imbalance up here, which we've just like kind of filled with that wick, but we also fill it with that wick too. it's kind of like, this could be one of a few things. This looks like accumulation, where we've got that spring, that test, and now we're like waiting to jump the creek above this high. Because on the weekly, this has been pretty well just a downward slope, right? If we measure it from this high to the low, we can see that we came pretty well to that 61.8, and we're in that area where we like to see a bounce from on the weekly, right? So this is why, to me, this could be like, you know, this is accumulation. We can even see that we have this, right, this last down move before the up move. We might come down for another test before officially coming to the upside, looking for a retracement up to this area right here. Yeah, beautiful. This is, let's take a look at this. Oh yeah, beautiful.
Alright, so let's get it started. First of all,
RJ, what a beauty. I'm gonna save this video. Excellent. We'll go ahead. I'll toss this. Actually, you already tossed it in the chat, so we're good. Beautiful. Walk off method training. Beautiful, beautiful, beautiful. Breakthroughs on breakthroughs. What's imbalance? Good question. I can break down imbalance real quick, and then I'm probably gonna wrap up today's session. We also will be on tonight at 10 p.m. Eastern. This is what I'm gonna do as well. If you guys have like any sort of questions, feel free to follow me on Instagram and just send me a DM. You know, I'm happy to you know, hop on one-to-one sessions with you guys if you guys want any kind of further breakdowns. I'll look at the NASDAQ in a second here. I see someone in the chat asking about the NASDAQ. I'll go ahead and take a peek at the NASDAQ briefly here. But yeah, this is a good way to get in touch with me, you know, aside from just Telegram. You know, follow my IG, sauce a DM if you guys are trying to hop on one-to-one sessions, right? Because that's what we're here for, right? Just bettering everybody's understanding, and really just, you know, being able to open people's eyes to these concepts that are already trading, but also open the eyes of those who are not trading, right? It's all perspective. All right, but I'll go ahead and I'll toss this in the chat too. All right, cool. So someone was asking about the NASDAQ. Huh. Yeah, the NASDAQ just trashed the highs. We were talking about this earlier too with the interest rate cuts. We finally took out the highs on US 30 on the shorter term. I still want to see all these highs just breached and destroyed. I know my boy, one of my buddies, he actually was in a buy on SPX, which is also just flying right now, and has breached above these highs. Right now, there's like, you know, the sky's the limit, especially considering how like a lot of money's being printed off out of thin air and reinflating or artificially inflating these indexes or indices. It's like, that's a whole nother story as well. The current state of the economy and like everything. Those are training calls that we do as well every single Tuesday and Thursday at 8 p.m. Eastern. For those of you guys that want access to those calls, just shoot me a DM. You guys can hop on those calls for free as well. But let's go to, what's a good example of imbalance here? Let's look at gold. Gold's a good example. So basically imbalance, or IPA as I like to call it, is something like this. So you all have seen like a gap in the market before, right? Where, you know, let's say price action comes up to here on a Friday, right? The market closes at this point, but then on Sunday it like gaps up, right? This kind of gap, this is what we call imbalance. The difference between a gap and imbalance though is that, right, we don't visually see a gap in price action with imbalance. Okay, this area right here, this is what we call imbalance, where, you know, the last area where buying was offered was at the top here. We came down, we dumped down really quickly, price came up a little bit but continued to fall off. This whole area is what we call imbalance. And imbalance, basically, if we were to think about this in simpler terms, it's like, you know, in order for us to be trading, there always needs to be someone on the opposite end. So if I'm looking to buy, someone needs to be on the other side looking to sell, right? If you're looking to sell, someone needs to be on the other side looking to buy, okay? In this case, right, we can tell that the institutions got behind this move. This is a very fast move to the downside, and therefore there was not much of an opportunity to be buying in this area. And buying needs to be offered on both sides need to be offered in order for price action to be considered and classified as healthy. So this is imbalance, right? Unhealthy price action, and eventually we want to see price come back up and fill this area in before continuing to the downside. We were talking a little bit about imbalance yesterday and how we can look to trade off of imbalance, and there's a few different ways we can do things. Again, this has to do with the Fibonacci tool as well, but we can measure the imbalance from the top to the bottom here. We can place a line at the dead center of this imbalance, that 50% point. Okay, we can set an area that we're looking at here to trade from, which if we hit play, we'll see that price comes back up. It gives us that wick reaction off the 50% point. This is a place where you can look to take a trade from, right? Understanding that there wasn't much opportunity to be buying in this area. The algorithms, the auto traders that the banks use don't like imbalance. Imbalance must be filled, whether partially or fully. A lot of times we have this saying where it's like, if imbalance is only filled partially, it's just creating more imbalance, because now we still have this whole other half which hasn't been filled yet. And if we drag this out some more, we'll see that eventually price does come back and fill the area of imbalance entirely. So the other place you could look to enter a trade from, we have the 50% point of that initial area of imbalance, and we also have the full gap or full imbalance fill, if you will. And we'll see that price comes back up. Give it a bit of time here, we'll speed it up a little bit. Price comes up, fills that last bit of imbalance entirely, and then dumps off. And as it's dumping off, guess what happened? It created more imbalance, right? Some more imbalance right here. This candle was so fast to the downside that there wasn't much opportunity for buying in here, okay? Healthy price action needs to be having both buying and selling offered at any given time. So we go ahead, we measure this again with the fib, mark up that 50% point, hit play. It's kind of lagging a bit. We eventually will see price come up. Once again, give us that 50%, reaction off the imbalance here. Okay, but all this is doing is just creating more imbalance, and we then need to measure it from the wick that we had here to the last buying that was offered up here. We still have this area of imbalance, and if we go to real time, this is my bias on gold right now. This imbalance is yet to be filled. We have all kinds of equal highs up here, right? I want to see this pop up, give us a reaction off of this institutional candle right here, and fill the imbalance before continuing to the downside. This is something I'm looking for next week on gold, personally. If we take our fib and measure it from this high to the low, we can see that we've been floating in this kill zone, right? But I wouldn't be surprised if we pop up to fill this imbalance before then officially dumping off. And again, where would we look to take profit? We can look at this on the daily as well, right? The move down, right? I believe that's, yeah, that should work still. Yeah, beautiful. Whoops. 4 hours cleaner though. 4 hours cleaner. Here to here. Right, you're looking to take profit probably within this area, and then it's just rinse and repeat, right? You drop from the previous high to the most recent low. Once again, you would be looking for that retracement into the kill zone area, and then again, just looking to ride it down until we get to that daily point, right? We're understanding that this is overdue a retracement. We're looking for price to come down to this kill zone right here. So for now, you know, we're looking for these sells. We're selling until we get down to here, and that's what we're looking to buy. And that's where we start buying from, because gold is going to continue flying to the moon. Gold is going to continue flying to the moon. I would not be surprised if we break above these previous highs when the next recession happens. Everybody's going to be running to golds because gold is a store of value when the economy is unstable. Right? So, something to keep in mind, but that's again, that's a whole new story. Whole nother story. But with that being said, guys, hopefully y'all got some value from today's session. I know we had some people in here that were getting some breakthroughs, so that's amazing. That's what we're all about. You know, we still have 14 people on this call, not including me. 15, not including me, I should say. So that's awesome. Hopefully y'all have an amazing rest of your Friday. We will be back at 10 p.m. Eastern, so in around 9 hours, I'll be doing another session with Josh. Josh and I'll be hopping on here to basically combine the three things that we learned today. Or not three things that we learned today, but what we probably did learn three things today. We learned about 5 fib and then imbalance. We'll be combining all of it, everything that we talked about this week. We'll be talking about market structure, Wyckoff, and the fib. We're going to be combining it all on tonight's session at 10 p.m. Eastern. So make sure y'all are on that. And yeah, no problem. My pleasure, you guys. We will be in touch. Feel free to reach out to me on Instagram, Telegram, whatever. All right, let's stay connected, y'all. And with that being said, I'll catch you guys very, very soon. Peace out, y'all. Clap easy.